Welcome to TheoTrade. This is Don Kaufman. It's February 5th, 2020, and you are watching the TheoTrade evening video. We're just moments after the cash close. The S&Ps, once again, exploding to the upside. They're up another 35 handles, equivalency of about 1%. The Nasdaq lags on the trading session. What you're looking at on the chart right now happens to be the last 30 days down to a 1 hour candle. And the reason I'm using this is just to visualize much of the volatility that we've seen really over the last 30 days, both the upside and on the downside. I thought this is a great way to actually explain this, because no matter how many times I will look at the markets today, I look at it yesterday, and you see these explosive moves right back to the upside, I can't help but continue to ask that question. Has this risk in this markets, is it really subsiding? And I'm going to go about answering much of that. Again, the moves to the upside in this marketplace are just as vicious. They are rip your face off rallies, into effectively all-time highs in the S&Ps. But at the exact same time, take a look what has occurred inside of the Nasdaq. And again, you can see it. Oh, okay, it's just a little bit of a pullback. Really, when you look at this on an intraday basis, this is an outright hideous sell-off from roughly 94.60 effectively down to 93.20 in a matter of less than an hour here after the cash open. I mean, again, you just can't get off your game in this marketplace because there is volatility everywhere out there. A few aspects that I want to bring up, I think that really resonate with me. And again, I'm not trying to portray, being bearish in here. I just can't help but see risk everywhere that I'm looking right now. And I want to display precisely that to you. One of the first things, I could talk about the volatility futures till I'm blue in the face. Maybe that doesn't necessarily do it for everybody, right? You could take a look at the bond market. We could talk about the coronavirus, which continues to spread, but maybe the virus fears have kind of subsided. Here, I have a better way to actually display this to you. Look at some of the recent earnings that have come out. All right, this is all stuff that pretty much was out, yesterday, last night, coming into this morning. So Disney, all right, so the stock traded down a little bit, quite minimally on some of the numbers over there. Then I went in and I tried to find pretty much every underlying that had a decent sized market cap that had earnings pretty much yesterday. Look at Spotify. All right, it's down about 5%. What else released earnings yesterday? No, I had to look at Chipotle, so the 850-pound burrito. Guess what? It was down about $30 today. All right, it's about 3.5%. Then I looked over at like Snapchat. Nobody likes that thing anyway, but it's down about 15%. Obviously, Tesla, but Tesla's its own animal and it's not earnings related. But when it came down to it, I was looking through this and everything that's releasing earnings right now, people, it's not good. It's not good. In fact, one that came out right after the bell, maybe we're actually seeing better results over here, is Qualcomm. Well, guess what? Qualcomm in this particular case, right, had an expected move of about $5. It's not even up $1, with its earnings out. So earnings at this point are questionable at best, but does it matter? The marketplace just continues to chug higher. Now, with the marketplace chugging higher, I like to look at correlations, right? So I want to cruise over here and take a look at the S&P 100. And you can see, for the most part, this is like an all-up day. The stocks that were down today, a lot of them news, earnings related, as I just showed you a moment ago, but there's heavy correlations, which in effect means the market's supposed to move, as a whole. Clearly, that is not the case. What's going on inside of the Nasdaq? Now, this is where, again, this divergence between the Nasdaq and the S&Ps is where I would look for some real volatility to start to emerge, on Thursday and Friday of this week. Obviously, we've already seen volatility. We've already seen, the S&Ps continue to kind of explode to the upside. But there's obviously an issue inside of the Nasdaq, and it stems from what you're seeing in terms of the monsters of tech. For those of you unaware of what the monsters of tech happen to be, this is a conglomerate symbol that we built here. It's Facebook plus Apple plus Microsoft plus Google plus Amazon. We kind of built our own index product. And you can see the monsters of tech, exploded on the scene this morning, but contracted substantially. And again, what you're looking at here is a 1 day, 1 minute. And when you start to look specifically at today's trading session, it almost doesn't do it justice. When you look at it, this index that we built opened almost at 9,200 and fell to 9,000. 200-point decline okay, in our index here in a matter of, again, 1 hour. That's effectively what yanked down the entire Nasdaq. And, you end up the day and, all right, Amazon's only down about 0.5%, okay, but most of these underlyings fell from extreme highs. For instance, Microsoft hit 184 today and contracted back. And again, I can't help but reiterate, how much market risk is really being packed in there. Now, at the exact same time that we just saw, okay, the biggest market caps that we've got, right? Okay, they came in today. I mean, effectively, the monsters of tech, they ended the day flat. The Nasdaq is pretty much flat on the trading session. What gives? How could the S&Ps possibly, okay, be up by a tune of 1%? Well, that has everything to do with the financials. Okay, the financials, okay, we're back at what? Effectively all-time highs. And if you haven't looked at the financials, you could look at the entire history of the financials. We're all-time high kind of territory here inside of the financials. I'll zoom back in for a second, and I'm also going to take you what's called auto-expected moves. Okay, how much of a move were we really expecting this week? Okay, negligible. How much of a move do we have? Look how far outside the anticipated move we happen to be. Okay, this lower box over here, hey, listen, this is the range we're supposed to be in. Where are we right now? Okay, we're double it. I mean, we're literally 2 standard deviation move up inside of the financials. But it's Wednesday, okay? Now, with the financials exploding to the upside, and I'm going to bring back a trade here in just a minute on those financials. I also want to cruise over to the SPX because, week in and week out, I talk about the SPX, I talk about the expected moves. And I'll remind you, this is actually some of the topics from our weekend video. This weekend video, of course, was out, and I don't mind going through and rehashing some of the topics, but the specifics I wanted to get to from the weekend video were this week was basically an $81.42 move. And we had, all right, 23 weeks without a breach really of expected move. And all of a sudden, what are we seeing? Okay, the last 3 weeks, we had this huge breach right here, a big breach of expected move, a ripping breach to the downside. Okay, look how far outside the expected move we are right now. And again, I want to reiterate this. Okay, this week, and the week that we're currently in, we're supposed to have just about an $81 expectation of movement. We're already outside it. At this point, I would put a strong probability for us reverting back into the edge of the expected move. The edge of that expected move, right there. Where is it? 3307. Look for the marketplace to contract back to 3307. Now, does it have to do it? Absolutely not. Nevertheless, that is the highest probability we can provide to you. Now, on that front, knowing that, hey, we believe that the S&Ps are going to contract back to that 3307. Okay, and that's going to take a little bit of sell-side activity. Again, how far we've come in the last 3 trading sessions is pretty much spellbinding here. I mean, again, if you take a look, this is where the week started. We started at 32.26. Here we are. Oh, don't worry. We're just about 110 S&P points higher. 110 S&P points higher. As I said, exploding back onto the seam, but you just can't help but feel that risk, it just hasn't really subsided. It's the marketplace right now is almost like in a hysteria, if you will, to the upside. And again, you can see the edge of that expected move right here. It was touched yesterday, pulled back in, but 3307 is the marker over there. With that, I revert back to the financials because I think there's a pretty good opportunity in the financials. The financials, too far, too fast. All I'm looking for, is a shallow pullback inside of the financials. And I want to be part of the shallow pullback in financials. How do I take advantage of it? I'm going to go into JP Morgan. I'm going to use an in-out spread. It's 1 strike in the money, 1 strike out of the money. Okay, so this is buying the 38, selling the 136. So I'm buying the 138, selling the 136, about 30 days out. This spread should be trading anywhere from, we trade it from 80 to about 90 cents. Gold. I mean, that's a relatively effective price. Okay, looking for about a 55% return inside of this particular spread. Okay, again, we're not asking for a huge bearish move inside of JP Morgan. All we're simply saying is too far, too fast. When it does pull back, I want to be part of that party. And you can see JP Morgan as well is well outside. Now, if you're not comfortable necessarily trading the equity product, JP Morgan, you could go back over to the XLF. All right, we shall continue, onward and upward. Now, as I said, the Nasdaq weakness, I think, is what really kind of shakes me up in this marketplace. Okay, but that's not all. I mean, when I say the Nasdaq weakness kind of shakes me up, you look at it and you're like, wow, and the Nasdaq, fell out of bed pretty much this morning, and it didn't take the rest of the market with it because of, well, the financials, and I've been very financial centric, but you also have the energy sector that's playing a larger role. Speaking of which, we have closed, okay, our spreads in the energy sector. We were bullish in the energy sector. We got the move. Okay, we're out of the contest. That's all it took is one explosive day to the upside, right? I love this stuff. It's just bounce and fade trades, right? This was a bounce trade. This is an underlying that was getting absolutely decimated. It bounced. We had a bullish spread on it. Okay, the fade trade, it's JP Morgan. You go out there, you fade it because it's been incredibly strong as of late. Now, as I was saying a moment ago, the Nasdaq absolutely made me nervous today, but it's not just the Nasdaq. And this is where I'll geek out on you for a minute. I'll start on the bonds. Yeah, the bonds have pulled back a little bit. Okay, but the bonds have still skyrocketed. Let's just be clear about how far the bonds have come. I don't care that the S&Ps are sitting at or near their all-time highs. Okay, because the bonds have still exploded to the upside. What have we had? We gave back a little bit in 2 trading sessions. All right. Okay. For the most part, the bonds are still heavily elevated. But what really kind of intimidates me, the volatility futures. You could say the volatility contracted a little bit. The volatility futures, though, they are what I would term, far from normal. If you take a look at the volatility futures 14 days out, you take a look at the volatility futures 42 days out, they are still close. All right. We're still, listen, the volatility skew normalized to a degree, right? But we're still very close to a flat volatility skew, which effectively means, this marketplace, if it even flinches to the downside, the volatility will once again invert, and we'll be right back in the midst of some fairly extreme activity in this marketplace. And again, even seeing us rally all the way back up, and as I said, I don't trust it as far as you can throw it. No matter how large these candles are, we're seeing effectively volatility to the upside. And it's very contrary to what you learn in this business, especially as an options trader. As an options trader, you're like, nah, volatility only occurs when the market tanks. Yeah. Well, right now we've got volatility occurring, to a marketplace to the upside. And again, it's very fever pitch the last couple of trading sessions, because most trading sessions that you're ripping to the upside, it's a little bit of covering, a little bit of this. People, we did 2 million S&P contracts today. 2 million S&P contracts. And I can show you a whole lot of up days from October to November to December, a whole lot of up days. We barely even sustained 1 million contracts. Here we are, the last couple of days, doing 2 million S&P contracts. I'm telling you, this week is far from over. Get ready to rumble. The volatility is not done. Our opinion here, the risk absolutely has not subsided in this marketplace. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.